I think our investors don't understand our long-term value. For the standpoint of Nio, we have faith in our long-term value. There are complicated reasons led to the stock rise and fall, which is beyond our control. It's a very complicated thing, especially if there is a short-selling mechanism in the U.S.
Insightful, comprehensive, strategic. Nio, innovative electric cars, bold strategies, but their stock is stuck at just $5? What's going on here? Is this a hidden gem about to explode, or a company facing too many headwinds? Can they really hit profitability by 2026 with Tesla breathing down their neck? In this video, we're diving deep into Nio's plans, their challenges, and what it all means for your investment portfolio. We'll analyze their new brands, their tech, and whether they can truly compete in the EV race. For the absolute latest Nio price targets, exclusive insights, and our full investment breakdown, subscribe to the wiseinvesting.com newsletter. We'll keep you ahead of the curve in the EV market. Go ahead, subscribe to our newsletter. Yes, despite its achievements and robust revenue growth projections, Nio stock languishes at approximately $5 per share. This valuation raises questions about the disconnect between the company's operational progress and its market performance. Factors such as intense competition, slim profit margins, and geopolitical challenges seem to weigh heavily on investor sentiment, overshadowing the company's potential and progress. Nio, the Chinese electric vehicle manufacturer, has been marking milestones and refining strategies in a rapidly evolving market. Celebrating its 10th anniversary, CEO William Li laid out a bold vision for the company. Key priorities for the next 2 years include launching competitive products, enhancing operational efficiency, and achieving profitability by 2026, goals deemed non-negotiable. These efforts are critical as Nio faces competitive pressure from rivals and challenges maintaining profitability amid rising production and market complexities. Despite promising a 15% to 19% year-over-year revenue growth for the fourth quarter of 2024 and a 44% to 50% increase in vehicle deliveries, Goldman Sachs recently downgraded Nio's stock from neutral to sell. Analysts highlighted the company's slow production ramp of its Onvo model and limited pipeline for new models as areas of concern. Nio's shares have dropped over 35% in the past year, reflecting investor caution amid tough market dynamics. Nio's management has showcased resilience by addressing external challenges, such as European tariffs on Chinese electric vehicles, which impacted pricing and sales volumes. Instead of absorbing costs, Nio raised prices, demonstrating a commitment to profitability. This strategy aligns with their broader transition from aggressive investment toward achieving sustainable financial health. In October 2024, Nio achieved cash flow positivity and reaffirmed its goal to break even by 2026. The company also highlighted improvements in gross margins, which are expected to reach 10% by 2025 as production scales. With an ambitious target of doubling delivery volumes in 2024, Nio is poised to expand its market share, particularly in China, where it competes with Tesla, XPeng, and Li Auto. Nio's growth strategy emphasizes diversifying its product lineup to target a broader market. The Onvo brand, launched in September, and the forthcoming Firefly brand exemplify this approach. Onvo's first model, the L60, priced between $28,000 and $42,000, has already contributed significantly to sales, and production is planned to scale further. Firefly is expected to enter the market by 2024 with a mix of small and compact SUVs aimed at more budget-conscious consumers. These new brands will complement Nio's premium vehicles, enabling the company to cater to diverse customer needs while improving economies of scale. By expanding its retail presence and enhancing its battery swapping infrastructure, Nio reinforces its commitment to customer convenience and accessibility. In October 2024, Nio reported deliveries of 20,976 vehicles, a 30% year-over-year increase. This performance outpaced rivals like XPeng, which saw a 20% increase, though it lagged behind Li Auto's 27% growth. Notably, Nio's delivery figures for the first 10 months of 2024 surpassed 170,000 units, representing a 35% year-over-year increase. Such growth underscores the company's resilience in a competitive market. Nio's valuation remains compelling, trading at around $5 per share, approximately 1 times its projected 2024 revenues. This is significantly lower than Tesla's valuation of 7 times forward revenue. With revenues expected to grow by over 35% in 2025, Nio presents an attractive investment opportunity. Analysts suggest that sustained growth could lead to a re-rating of Nio's stock, potentially aligning it more closely with peers like XPeng. Despite pricing pressure from competitors, Nio's gross margins have shown notable improvement. In the second quarter of 2024, the vehicle gross profit margin rose to 12%, up from 9% in the first quarter. This growth was driven by increased delivery volumes and easing supply chain constraints. Even with a 10% drop in average selling prices, the company maintained robust financial performance, showcasing its ability to adapt to changing market conditions. China's electric vehicle market continues to offer immense growth opportunities, with record new energy vehicle sales in October 2024. Government incentives, such as trade-in subsidies for old gasoline vehicles, further support this growth. These policies have bolstered consumer interest in transitioning to electric vehicles, providing a favorable environment for companies like Nio. Speaking of favorable, imagine holding a stock in your portfolio that has achieved an incredible year-to-date return of 768.36%. We initially highlighted this stock in our newsletter back in September when its price was $86. Since then, its value has soared to over $330. Interested in this stock? Subscribe to our newsletter now. Simply scan the QR code to access this opportunity. Now, let's get back to Nio. Innovation remains a cornerstone of Nio's strategy. Beyond its expanding product lineup, the company invests in battery swapping technology, which enhances customer convenience and reduces vehicle downtime. By the end of 2024, Nio plans to operate over 600 battery swapping stations, underscoring its commitment to a seamless user experience. Nio's future goals include achieving a 20% vehicle margin by 2025, which only Tesla has accomplished. While ambitious, this target reflects the company's focus on operational efficiency and scaling production. The introduction of lower-priced brands, combined with premium offerings, positions Nio to address a larger market and compete effectively with global and domestic rivals. While Nio's outlook is promising, challenges remain. Phasing out of Chinese market incentives in 2025 could impact consumer demand. Additionally, competitive pressures from price cuts by Tesla and Li Auto may strain margins. The company's ability to scale production of its Onvo and Firefly brands will be critical in achieving its ambitious growth targets. Geopolitical factors, such as tariffs on Chinese electric vehicles in Europe, add another layer of complexity. However, Nio's proactive pricing strategy and focus on profitability demonstrate its readiness to navigate these challenges. Nio's journey over the past decade has been marked by innovation, resilience, and adaptability. As the company embarks on its next phase, its focus on profitability, strategic expansion, and technological advancements positions it well for sustained growth. By targeting diverse market segments with its premium and value-oriented brands, Nio aims to strengthen its competitive edge in the dynamic electric vehicle landscape. Despite facing competitive pressures and evolving market dynamics, Nio remains focused on scaling production and improving profit margins. Its commitment to financial sustainability highlights the company's readiness to navigate these challenges effectively. With supportive market conditions and robust demand for electric vehicles, Nio is poised to charge ahead and solidify its place as a key player in the global electric vehicle industry. For the latest price target forecasts for Nio, operational updates, and other investing tips, click the link below to subscribe to our newsletter today. Remember to hit that subscribe button, click the notification bell, and see you in the newsletter. Thank you for tuning in.